Hi, welcome to the Financial Prophet. Today, we're going to talk about why silver could go much higher. So we often discuss gold, but really it's silver that should be getting a lot more attention here. Silver is an indispensable metal. It is used in almost everything we see and touch on a daily basis, whether it's batteries or going to the dentist, or if it's semiconductors, nuclear energy, photography, solar, and much more. Silver is present in it, and it's one of the crucial elements that makes everyday things work. Therefore, silver is a very underappreciated and, in my view, very undervalued metal here, and it has the potential to go much higher. Now, we discussed buying the golden dip several weeks ago, and it's worked out pretty well. Gold miners have appreciated nicely since hitting their recent lows, and there could be considerable more upside from here. For instance, Newmont Corporation has climbed by more than 10% since it bounced off the 48 support level recently, and I discussed buying that dip. So looking at Newmont's chart here, we may have a constructive cup and handle pattern forming. So this developing pattern could potentially help make the stock go considerably higher in future months and possibly even years. We saw a similar dynamic with Barrick Mining Corporation, as it also gained about 10% from its recent low point. Now, when we talk about gold miners, I often like to discuss the primary gold mining ETF, which is GDX. So looking at GDX here, we see that GDX has also performed relatively bullishly recently, and it's had a nice rebound off its recent low. And there's a high probability that we could see GDX and gold miners in general moving substantially higher here in the future. Now, GDX may have appreciated too quickly after the early April panic bottom. However, given that gold miners are still very cheap, there could be substantial upside potential after GDX moves above the 51-53 area resistance level. Now, the recent pullback in gold and gold mining stocks seems very constructive, and due to the undervalued and underowned nature of gold-related equities, there could be considerable upside ahead. However, silver and silver miners appear even more undervalued. Now let's talk about why gold and silver could go much higher. So the thesis surrounding gold, silver, and their respective miners, I call them GSMs, is becoming more and more solid, as it's becoming more evident that the US and other governments are in major debt trouble, and this trend isn't likely to reverse anytime soon. Now, before we start looking at the United States, let's talk about Japan for a moment, because Japan is really the poster child for really high debt, as Japan is essentially has about a 250% debt to GDP ratio, which is massive. It's much higher than any economy globally. Japan was able to sustain this very high debt level for a long time because Japan had extremely low interest rates for forever, basically. Japan also benefited greatly from the carry trade in the yen. It's where investors were borrowing yen at a very low rate because of the ultra low interest rates in Japan. And then they were trading the yen into other currencies. And if we look at Japan's 40-year bond yield here, we see that it's at, it's around its highest level ever. And it recently hit almost 3.7%, which is essentially unheard of and extremely high for Japan. This is causing some real issues in Japan's bond market. It's spilling over into the American bond market. And we're actually feeling and seeing the ramifications in the global bond market, and there's the potential for this situation to continue unwinding in a way that's very bullish for gold and silver. These metals can really benefit greatly as this kind of debt monetary bubble deflates in future years and decades even. So again, looking at Japan's 40-year bond rates and their bond rates in general moving very high, which is very atypical for Japan, it's a very troubling dynamic to observe. Now, let's look at the United States debt clock, because it kind of gives us an image of what's going on in the American debt system. So the United States government debt is approaching 37 trillion. roughly 122% of GDP. Moreover, the official federal budget deficit is over $2 trillion now, which illustrates that the United States government spends more than $2 trillion more than it rakes in the year. Now, the interest payment alone on the national debt has ballooned to over $1 trillion now, illustrating that American taxpayers are forced to flush over $1 trillion in taxpayer dollars per year just to service the monstrous debt. Now, that equates to about 20% of total tax revenues, and it's even greater than the entire United States defense budget now. To compound these issues, Moody's recently put a downgrade on U.S. debt. Bond rates are surging, and they're surging for a good reason, with long-term U.S. Treasuries now illustrating yields around decade highs. So we have the 10-year, around or above 4.5%, and we have the 30-year now trading steadily around or even going over 5%, which is extremely high. Again, these are decade high interest rate levels, and it's not clear how long the system can withstand these super high rates without falling into a recession. So that's the big downside of having high rates. And we can also look at Japan again for context, because their bonds had really ultra low rates for a very extended period of time, and then for decades basically, and then when Japan's central bank stopped buying as much Japanese bonds, we really see the rates spiking. Investors are demanding higher interest rates for this increased risk, increased debt environment, and we're kind of seeing a similar image transpiring in the American bond market now as well. Therefore, the climate is very bullish for GSMs, and silver has been basically left behind in a very big way. So again, GDX surged by about 55% from the start of this year, trough to peak. In comparison, one of silver miners' primary ETFs, the Global X Silver Miners ETF SIL, it increased only by 33% in the same time frame. And we're also talking about 33% increase after a significant decline into the year end last year. So additionally, if we look at major silver miners like Pan American Silver, it's only up by about 15% year to date. And Hecla Mining, Shell, it's essentially flat for the year. So there you go. Silver miners are still very, very cheap. And it looks like investors are very much still behind the curve on gold miners and silver miners especially. So let's talk about the gold to silver ratio a little bit here, because the gold to silver ratio was already very elevated before Liberation Day. However, it surged to about 105 after the tariff announcements, and it remains highly elevated at about 100 even today. So these are the highest gold to silver ratios since around mid-2020s, when we witnessed the ultra low silver prices around the COVID-19 panic selling lows. So this current ultra high ratio suggests that silver may be considerably undervalued relative to gold, and a more stable and historically consistent gold to silver ratio is about 70 here actually. So we've also seen the gold to silver ratio narrow to about 35 during high periods in gold and silver bull markets. And that's where we may be headed again in my view. So let's talk about how high silver could go potentially. I would be lying if I didn't say that the current environment didn't remind me of the last real silver bull market following the 2008 financial market meltdown. Then the Fed introduced the original QE program and silver took off. So let's look at the silver price for the last 20 years. And we see the really significant spike. So silver spiked from a low of about $9 to nearly $50, roughly a 5x increase in only about 2 years. Now, I'm bullish on gold, and I have a $4,000 gold price target for year end 2025. We don't know if the gold to silver ratio will decline all the way to 35 again, but even at 50, if gold reaches 4,000, and if we have a gold to silver ratio around 50, this implies that the price of silver could be around $80, which is more than a 100% increase from current levels. So let's talk about silver not being your typical market, because silver is not your typical market in the sense that it's relatively small to many other assets, including gold. The total global market cap for silver is only about 1.9 trillion. In comparison, gold's market cap is nearly 12 times that of silver at approximately 22. Even companies' market caps like Microsoft, Apple, Nvidia, and others are now worth more than the entire global silver market combined. Therefore, when the silver bull market gets going, it can be very difficult to stop. Long investors push prices higher and short sellers are forced to cover, creating a very powerful short covering and rally effect. We could see a similar bullish dynamic unfold with silver as we advance. The current bull market in silver began around the lows in 2022. Silver was around $18 then. So we've seen about an 80% move off the lows. So here's a silver three-year chart here. So silver has been consolidating around $30 for about a year. Therefore, it's likely setting up for a substantial move higher above the long-term $34 to $35 resistance range. I believe a move above this critical resistance could put silver on a sustainable path to go much higher. As a more accessible monetary period approaches, and we could see lower interest rates and potential rounds of QE, this dynamic is especially bullish for silver as there could be substantial monetary stimulus, and we've seen silver go much higher in these environments before. Silver increased by about fivefold through trough to peak as the Fed introduced QE in 2009, and it roughly tripled after the coronavirus Fed intervention. If we implement a median roughly fourfold increase in this bull market cycle, we could see the price of silver rise to about $72 from the $18 low point in 2022. And in a more bullish case scenario, we could be in the early stages of a long-term commodities bull market run, in which case silver could potentially run north of $100 in future years. Fundamentally, it appears highly undervalued relative to gold, has very extensive and broad industrial properties and potential, and demand should continue outstripping supply in future years. We also have a more favorable monetary policy approaching that could spark a much more considerable rally in silver. Silver is also a relatively small market, and the gold to silver ratio implies that silver could outperform gold as we advance. Moreover, silver miners are trading as if silver will remain cheap or the price of silver will drop in future years, and I just don't believe that, that's likely to be the case. Therefore, I want to highlight my top 2 silver mining stocks here. Number 1, Pan American Silver, which is one of the most significant silver producers globally. The forward P ratio is only about 13 here, and the forward PEG is only about 0.5. Additionally, Pan American Silver and other silver miners, their forward price to earnings and sales estimates, they appear to be predicated on lower and declining silver prices. So in reality, silver prices could be substantially higher a year from now, or in 2 years from now, or in 3 years from now, making Pan American Silver and other silver miners strong buys here and now. My 1-year price target range for Pan American Silver is $35 to $40. Now, my second silver mining pick is Hecla Mining. It's another excellent silver miner. It could use some work in the efficiency area, and I think that is where the company's new CEO and management is focusing on higher efficiency, lower production costs, and basically higher margins we want to see at Hecla Mining. But it's nonetheless it's the most significant silver miner in the United States, making it's also cheap here. It trades at only about 14 times forward earnings. So we could also see substantial EPS growth in Hecla Mining and in other silver miners. And future estimates, again, appear predicated on lower silver prices, which is not logical, and we could see kind of a reversal in the estimates, potentially propelling Hecla Mining shares and shares of other silver miners much higher in future years. So my 1-year price target on Hecla is $8 to $10. I thank you for watching my video. I hope that you enjoyed my profit report about silver, and more importantly, I hope that it helps you make more informed decisions going forward. I would also like to hear your comments, so please join the conversation in the comments section below. If you like this video, please click like, share, and subscribe to my channel so I can continue making these videos for you guys. You can also join the Financial Profit, my exclusive investment community, which is Seeking Alpha's #1 service for proven portfolio profits. Thank you very much for watching. See you next time, and have an amazing day.